This week, the Fiat Federal Reserve began its latest rate-cutting cycle, lowering the Fiat Fed funds rate by 25 basis points. Drop that beat, Jerome. Go! I'm about to show you two striking mainstream financial media headlines illustrating just how aggressive the Bullion allocation suggestions are becoming. Look, when it comes to human beings and our predictable herd behavior, an adoption tipping point is the critical threshold at which either a new technology and/or in this case, an old idea moves from slow, early adoption to rapid mainstream acceptance. We are now entering the increased precious metals allocation adoption phase in this modern Western world bullion bull market. You remember all those years of battling back and forth around the key 2,000-ounce gold resistance line? Congratulations, you're likely part of the early adopters. Thus, real increases in purchasing power and your wealth position have been and are transferring further to you to come. Come on in, broader financial institutions and high net worth crowd. The average mainstream U.S. investor is still asleep at the wheel on bullion, at least for now. The first of the aforementioned bullion allocation headlines from this week came from the CIO at Morgan Stanley, declaring the new investment portfolio allocation should be 60% stocks, 20% bonds, and 20% gold bullion. Better late now than never, I suppose. And by the end of this worldwide bullion bull market, heavy allocations to bullion will be much more commonplace than they are right now. Oh, and by the way, humble brag, we posted in our SD Bullion Resources section a bullion allocation study in the year 2018 that suggested getting long bullion to the tune of around 25% of the time, with one's liquid net worth made total back-tested sense. Again, that was back at gold spot prices around 1/3 of where they currently are now. You're welcome, anyone out there who actually took that back-tested data suggestion that we published on our website and put it to use. Now, to the second of this week's major calls to allocate nearly 25% into bullion. Jeffrey Gundlach made headlines this week on CNBC, but rather than simply show you the article, let's actually allow him to speak to his 25% bullion allocation positioning himself.
I've often asked you as well, what does the perfect portfolio for the moment feel like? Have you been thinking more about that lately, and how would you answer that for our viewers who are thinking the same thing?
Yeah, I really haven't changed very much. I'm still think gold serves a purpose in portfolios. It's at a high level on a short-term basis, but the momentum is remarkable. I love it when a market goes up a lot and then instead of correcting, goes sideways for a while. And that's what gold did. It got up to about 3,300 and then it consolidated there, and now it's on up leg. I still think a 25% type of weighting in portfolios of gold is not excessive. I think that...
Really? 1/4 of one's portfolio in gold?
Yeah, I think it's not excessive, because I think that is an insurance policy, and it's in a winning mode because of the weaker dollar, and I believe that's going to continue. So a lot of my perfect portfolio concepts revolve around weaker dollar. So foreign stocks, European stocks make sense. I think some Asian stocks, ex-China would make sense, and you do it in local currencies. So I have a big anti-dollar theme that's going through things. And like I said, for bond portfolios, I think local currency emerging markets, I think having 10% there makes some sense. I would have probably 40% in stocks, mostly, if not entirely, non-US, as I've suggested.
Even with the AI theme and the trend of where that is, the tremendous advancements that are taking place, you wouldn't have any exposure or such minimal exposure to U.S. stocks like those? When new technologies come, there's the sky's the limit, but it gets priced in very quickly. And I use the analogy of electricity. In 1900, people started to realize that electricity was going to change the world, and they were right. And so there was a mania in electricity stocks that actually peaked out in 1911 before there was really widespread electrification. It was all priced in.
And in fact, since 1911, if you look at U.S. stocks, everything other than electricity-oriented stocks, and then you just look at electricity stocks, the non-electricity has outperformed since 1911. So it gets priced in very, very early. And the AI build-out is enormous, but it seems a lot like kind of the fiber optic stuff back in the late 1990s, where it's very real, it's happening, it's going to be world-changing, but the markets are incredibly efficient at pricing things in and often overdo it. So I am not a momentum person at all, unless there's a fundamental reason. And momentum driving things to very high valuations, if there's one thing that makes me not sleep at night is owning stuff like that. And that's just me. For some people, they'll make a fortune on it, but I think the fortunes have largely been made.
Now, to his point about heavy bullion allocations over overvalued U.S. stocks in the S&P 500, for instance, we are still, in terms of relative gold and silver values versus U.S. stocks, hovering around and above the 1929 high levels. When I look at these long-term charts, I simply key into the old 2011 low levels, confident that we are not only heading there, but likely beyond come the 2030s. Onwards, let's hear Jeff dance on the crypto crowd.
What do you think of these crypto treasury strategies that have become pretty popular, I would say, in the last handful of months, and some very high-profile people, well known to our viewers, and certainly in the investing world, the Tom Lees of the world, Dan Ives, and others who are taking advantage of that? What do you think about that?
Yeah, every few years there's something that comes up that's kind of a gimmick, and I remember Portable Alpha, I remember 3130 strategies. I think that a lot of these things are sort of gimmicky, and so I wouldn't be involved in that at all.
And because of, are you concerned about the volatility in Bitcoin and Ethereum, and if there's a major correction of some sort, those are the kinds of assets that would be hurt the most?
Probably that's right. But I don't spend a lot of time thinking about that. I'm not a big crypto person at all, and I notice that Bitcoin has underperformed gold this year, and that's pretty remarkable given how everything's up so much. So I don't really think that Bitcoin is a very good investment. I know that people have made a fortune in it, but it's lost its momentum, and I just don't think that it's going to serve the purposes that are hoped for.
We're going to touch on gold, silver, and platinum further along in the second half of this week's Bullion Market Update. Make no mistake, the shift to more aggressive precious metals allocations is underway. And it doesn't matter if I use the U.S. government's rigged CPI price inflation data looking backwards from here to the old 1980 high, or if we use shadow government statistics price inflation data. Either ways, silver has to perform multiples in spot price to near back to levels seen in 1980. Even the old 2011 price high and rigged CPI data calls for the current silver spot price to basically double from here to get past the old pipsqueak 2011 price high levels. The eventual gold mania price is likely a 5-figure number per troy ounce as well, somewhere well north of the rigged CPI data high that still gets brought out and laughed at by anyone who understands the price chart crimes. The 200-day moving average on gold is rapidly climbing, now over $3,130 an ounce. The current spot gold price ascent in fiat US dollar, its closest analog angle is the old 1976 to 1980 bull run. Spot basically eightfolded from 100 an ounce to over 800 an ounce in that run. Now, we began this latest bull climb from the 2,000 ounce level, so you get an idea of what gold is currently threatening to redo. Silver is still relatively dirt cheap in fiat Swiss francs, needing to more than double in its local spot price just to near its ancient nominal 1980 price high in much stronger than fiat Swiss francs. And meanwhile, the fiat US dollar quarterly silver price chart is beginning to signal breakout to any and all technical CTAs or technical investing analysts who look at these charts to try and find momentum long bets to plow into for profitable scalps to come. We are now entering and nearing the moment where new levered long hot currency inflows into the silver space. They're right around the corner. Just look at that chart. We'll be right back. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these Bullion market updates, and be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Yeah, and I think since we've launched the SD Bullion IRA program, we've even gotten more insight into this industry.
Right.
And you start to see like the email, the unorganization, and things make sense of why things take so long. When you use the traditional three, separate entity model, nobody's doing checks and balances with each other.
And like you said, there's horror stories now that that people are reaching out like, hey, the depository says 4 years ago they didn't get this inventory, and it's like this is crazy, guys. Like compared to our facility, everything, literally every inch of this facility is under camera.
I hope you enjoyed this short clip from my recent conversation with SD Bullion founder Dr. Tyler Wall. If you're interested in opening a gold or silver retirement account, then this video is a must-see. The insights and strategies that we reveal have helped SD Bullion customers save hundreds of thousands, if not millions of dollars inside their gold and silver retirement accounts. After $5 billion in transactions with more than 400,000 customers, I assure you, this video might be the most important thing you do for your gold and silver future. Visit ira.sdbullion.com/video today. There, you'll be able to gain full access to the entire interview, and you'll also be able to watch more short clips from our conversation. That's ira.sdbullion.com/video. I hope to see you there.
The spot silver and gold markets rose again on the week. The spot silver price closed at an important psychological level above $43 an ounce bid price. The spot gold price ended this week at $3,684 an ounce bid. The spot gold silver ratio fell a bit to end the week at 85. Technically looking out next week, let's see if 85 can be broken downward. In further evidence that gold bullion allocation suggestions are going mainstream, I backlinked a clip to this Bloomberg podcast from the week. Basically admits this current gold bull market structure is wider and deeper than any seen prior. The title of the podcast asks the question, quote, is gold the new reserve currency? And the answer is now yes, based on ongoing central bank reserve holdings data and the record tonnage of gold bullion reserve buying that government central banks have been doing since 2022. And we just dropped a new podcast with executives from the world's oldest sovereign bullion mint, the Royal Mint, and I want to highlight a discussion regarding this year's blowout in London gold and silver lease rates. The full podcast link is in the week's show notes, and this clip will give you a better insight into how difficult a business model high-volume bullion product minting can be.
Can we talk about lease rates real quick, because it's something that I don't quite understand, but I find it fascinating, and I know, was it historic numbers that you guys got to? So can you just explain?
Of course, yeah.
Okay, what is a lease rate? How does a mint like yourselves use a lease rate? Why is it important? Just walk us through it.
So most mints will lease the metal whilst they are running it through the organization to source and then produce the bullion coins. We only buy it once the customer buys the metal from us, and then we sell it back to the bank.
Okay.
So all the way up until that point of purchase from the customer, we lease the metal from the banks. And right in the heart of the tariff kind of uncertainty, COMEX, obviously, in New York, there was such concern over where those tariffs would end up, that a huge amount of physical metal was being transferred from Europe over into the US, so that the metal was close to the point of trades before any tariffs could go in place. But the pressure that placed on the system, and I think we covered this in one of our YouTube interviews, the pressure that placed on the financial and the logistical processes behind that meant that the leasing rates on gold more than quadrupled, almost overnight. Those leasing rates have now settled back down on gold. Silver, they're still a little bit higher than they were this time last year. Platinum is crazy.
Why is that?
Many different reasons. It's fundamentally it's down to supply and demand, and there isn't that much platinum going around at the moment, and it's
platinum squeeze.
Funding of it is just so much more difficult. Sorry,
Platinum squeeze.
We just started platinum squeeze.
Yeah.
but it means that many mints have had to kind of make a strategic decision in the here and now as to what they do with platinum.
Yeah.
We've had to make a decision on how we manage our stock portfolio of platinum. We've had to reduce the amount of platinum that we just have sat on shelf. We've had to look at our pricing because they are still remaining stubbornly high at the moment.
It's a difficult snowball to stop from just going down the hill because lease rates are high, therefore premiums from the mint to people like us very high. Then we're almost embarrassed to try to ask that of the customer, so then we probably don't even take it on for a short period of time, and then people are like, well, where's all the platinum? It's like, well, good question. I guess that's what started all this, right? Where is the platinum?
Yeah, and unlike gold, it hasn't come back. It's still staying there. So we're just managing the situation very carefully. We are still producing platinum to order for customers, but yes, you will see some of those additional costs, and we're not the only mint that are facing this, coming through in those premiums.
Yeah. So, what's a normal lease rate for gold in a normal market?
It would be difficult. So every mint negotiates its own. There's an underlying kind of rate, which there's a small amount of wiggle room, but it really does vary depending upon the volumes that you're doing, the commitments that you're making in terms of the amount of metal you can run through the business as to what rates you can negotiate with the banks.
It makes for some very difficult business decisions, I have to imagine, whenever the lease rate goes up 4%, 5%, 6%, and you're going, do I want to have anything on the shelf? Yeah. It's like, how do you make any money?
I remember the meeting I had with the Royal Mint board in the middle of all the tariff uncertainty, looking at the cost line of the business on the back of where the gold.
Just dabbing your sweat.
It was not a fun day, but thankfully, as
things change.
We all know now, things kind of calm down relatively quickly.
Yeah,
I think the whole thing on gold, I know silver is still stubbornly just a little bit higher than it was this time last year, but I think gold had almost kind of come back close to where it had been within 6 to 8 weeks. But it was, for those 6 to 8 weeks, it was an interesting time.
I wouldn't have wanted to been in your shoes, that's for sure.
And finally, I was fortunate to be a guest on the Silver Seeker YouTube channel this week. Mr. Silver Seeker does a good job informing his viewers about the physical bullion markets here in the USA. And he had a very important question he asked of me, specifically why I am so aggressively allocated into precious metals bullion products currently at the moment in 2025.
And that actually, James, that brings me to probably what my last question is going to be right here. One thing I don't like to ask somebody that works for a bullion dealer is, should you stack silver? So instead, what I want to ask you is if you could tell everyone just in layman's terms why they should stack silver and gold.
That's great. Great question. Just so I can throw it out there, like I was telling you before we got on there, I just got an order in. I'm still buying silver bullion, and I will buy gold bullion if there's a dip to the 200-day moving average. And platinum at 1,400, I still think is long-term value. So why? Why am I doing it? First and foremost, it's to preserve my purchasing power, all the stuff that I've worked really hard to save for. Your time is probably your most important asset, and that money that you so-called money they give you, it's not money. It's fiat currency, and it's going to disappear in value over time by design. And we are now up against a situation where the world knows it, and that's why they're buying in record size and gold tonnage. The emerging markets aren't having the U.S. bonds anymore. The U.S. bond has been going through a bear market for the last 5 years. It may have a little bit of a small little kick in a bull market for a minute. It's not even going to be a bull market. It'll just be like, okay, there's like 1 year of the bonds doing well, and then 5 more years of it doing terrible. That'll be for the next 10, 15 years, Jack. That's kind of how the bonds are going to look. They're going to be some of the worst places you would ever want to be. And the stock market will go through that as well. They're going to paint it nominally. They're going to do as best they can to make it look nice. But just go look at Venezuela's stock market, Argentina's stock market, and then divide it by gold. And that chart doesn't mean much because in real terms, it's getting its head handed to it by gold. And in real terms, it's getting its head handed to it by silver. You need to start using gold and silver as your denominator, as the thing that you judge what's good value and what's not value. The currency is going to go so badly in terms of inflation over time. I think that by design, they're going to be doing that in the next 10, 20 years. until we eventually come up probably to a crisis where we're going to have a reconvening of the social contract in the United States. And it's going to be probably pretty ugly. I don't like to go through the thought process of that because it's so far out how that might look. But from here to there, I definitely think having a private nest egg of bullion off the grid, outside the system, in private places where you and only the people you trust and know and love know where it is, I think is a prudent thing. And mathematically, you look back in time, 20 to 25% since 1968 to now has in gold bullion allocated has been prudent versus the S&P 500 and versus the bonds. But I would say it's even more. You could probably be even more aggressive now. And I'm just talking your liquid net worth, not your businesses or your houses or anything like that. Just your liquid net worth. What percentage is allocated? 20 to 25% in bullion makes total sense. If you're older, stick with gold mainly. If you're younger, be aggressive. You could probably get more silver allocation, maybe some platinum too, because that'll take a while, but it will eventually catch up 1-to-1 with gold, I think. So hopefully that answers it. It's really about first, it's store value. I definitely want to preserve my purchasing power. Second, I want to enhance it. I'm going to do both of them. That's the plan.
Yeah, James, that absolutely answers the question. One last thing, though, before we go. You said you had a little bit of silver that you just got. You want to take a look at that?
Try not to cut myself. Everybody knows when you get the blade out, stay steady. All right. Let's see. I've wanted to buy these for a while, and I think I might have had one or two, but I got 10 of them this time. I think you'll all recognize this one. Ooh, they're aged. That's cool. Some people like them when they're like vintage like that. I'm not sure I'm a big fan. I'll probably end up cleaning them, but I'll process them and post them on my Twitter so you can see before and after. Some people like them aged. I kind of like them clean. I like them retail ready. So if I sell them to someone who's just new to the market, they don't look at them and say, ew, they're dirty. It's not dirty. They're just aged. That's the way silver looks at the time. All right. So you guys recognize this one. The 1984 Prospector rounds.
Oh, I love them. I have plenty of those.
Yeah, these are pretty sweet. I mean, it's wow. Yeah, it's just a great design. Just bottom line. So yeah, there they are. Let me find the dirty one so people get the idea. It's only on the edge. On the edge, it's a wee dirty, but all that takes is E-Zest cleaner. Just dip it in that thing, and all that stuff generally goes away. Worst case, a little toothbrush, and that dirt will fall right off the edge. So
awesome. So you're going to share those on your Twitter, right?
Yeah, my Twitter is at James Henry Ann. If people are interested, you can follow me at Twitter, and I post all types of stuff. And our YouTube channel, I post a bullion market update at the end of every week. So Friday late in the evening, around 9 or 10 p.m. generally Eastern time, I post. So a lot of people don't wait for the post because sometimes it's not exact. So they'll wait till Saturday morning and kind of catch up on the latest news. I try and aggregate the most important prescient things related to precious metals. I try and keep it to like 15 minutes, 20 minutes typically. So we go straight to the punch. Sometimes you might need to watch it twice because it can be data dense, but hopefully I get the gist across to most people. Some people probably don't like it. I might speak over other people's heads sometimes. I apologize. It's difficult to boil it down sometimes. And I do the best that I can. So check it out, see if you like it. If you don't, no big deal.
Yeah, for sure. And guys, as I've told you recently in videos, I spend about an hour every morning watching and reading. And James, yours is one of them that I watch. So guys, I'm going to put a link in the description below for that. James Anderson with SD Bullion. Thank you so much for joining us.
Thanks. Always fun. The full link to that 18-minute video is also in the show notes below. Take advantage of the 10-ounce silver bullion bar at spot sale and other razor-thin, low-premium bullion product sales at sdbullion.com/deals, and have a wonderful weekend, you bullionaires out there. That will be all for this week's SD Bullion Market Update, and as always, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.